Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're going to try to lift the haze surrounding clean energy stocks with Peter Krull, Partner and Director of Sustainable Investments at Earth Equity Advisors. Instead of the boom that was supposed to ensue following the passage of the Inflation Reduction Act, clean energy stocks have choked off investors. The biggest fund, iShares Global Clean Energy ETF, is down about 32% over the past year, along with other pricier growth stocks, as higher interest rates took the wind out of its sails. Most recently, once an industry darling, Plug Power warned on November the 10th that the hydrogen fuel cell maker may not have enough cash on hand to fund operations for the next 12 months. Its shares are down about 95% from their January 21st peak, as the company looks set to plug the gap by issuing new shares in order to survive. So are those stocks too risky given the current climate? Well, let's ask Peter Krull. Welcome, Peter. Many thanks for joining us today. The first and most obvious question is, with all these billions of dollars flooding into clean tech from the IRA, why aren't stocks higher?
First, thanks for having me on, David. I really appreciate it. And that's a great question. I think there's a couple of reasons for this. The first is that, we are in a value environment at this point. We had been in a growth environment for quite some time, and that really led up to some really nice gains right up through 2021. But then things switched and value really has taken over. And for the most part, clean energy stocks are growth stocks. And so first of all, they're out of favor at this point. But second of all, we take a look at interest rates, and a lot of these as growth companies need money to continue to fund their R&D and fund their development. And so what we're seeing is companies like Plug Power might be running out of money because they don't have, or they're running out of money because of interest rates and inaccessibility to capital.
So presumably there is a long-term investment story there. Is this
Absolutely.
a good time to jump in to the sector?
That's the hard part. So as investment advisors, everybody always counsels to buy low, sell high. But it's really hard to pick that buy low point because, when do you get in? And it's a time when people are typically scared, right? So, we take a look at any time that there's dips like we're seeing right now as an opportunity to add to quality names. If we go back, I lived through the internet boom, and there were a lot of names that made it, and there were a lot of names that didn't. So, really looking at quality within the sector is probably one of the most important things. But yeah, it probably is a time to start selectively adding to your portfolio.
Let's look at some of the practical considerations for investors looking to get into the sector. It's widely known, for example, that the US grid is not really ready to receive the energy coming from renewables companies. Give us your take on that.
Well, absolutely, that's the case. Here in the States, we have this tendency to be more reactive than proactive to things, and this is a perfect example of that. The utilities have known that we are going to be adding to the grid from clean energy sources, but they do know that it's happening, and the investments are happening. It's just not happening fast enough. And so, we have opportunities for batteries to be added to the grid, which I think is just a huge opportunity, and other types of long duration energy storage that is not quite as technologically advanced as, say, lithium batteries, but things like gravity and other long duration energy storage technologies, if you want to call them that, are areas that we would be looking at for grid improvements.
And in terms of looking at the ETFs, how do you identify the most attractive pathways? I say that because, for example, the iClean ETF is global. It includes Chinese companies, whereas the QClean is pretty much US focused, but does also include EV makers. So what's your pick and why?
We use QClean, and we've used that for several years. Really just we like the companies that are in there. One of the most important things that I feel that an investor can do is look under the hood and see what are the different companies that are in any ETF or mutual fund or whatever vehicle you're using. And when I look at iClean, it feels more, if you want to use the word pure, to us in terms of the kind of companies that they're investing that are the solutions providers. When I look at iClean, even though it is global, and we do believe that we should be taking a global stance, there's a few picks in there that we really aren't comfortable with in the way that they are pushing clean energy forward. We, you know, those are pretty much what we're looking at. And from a performance perspective, QClean has performed a little better, just like, you know, the S&P has outperformed EAFE over time. We're seeing the same thing in QClean versus iClean.
Okay, Peter Krull, Partner and Director of Sustainable Investments at Earth Equity Advisors. Many thanks for your thoughts today. And that is your look at clean energy stocks. I'm David Pollard, and this is Reuters.